Good day, everyone. Trust you're doing well today. Today, we're talking about stocks update on how the market performed last week. I'm sure you've probably been seeing on social media and in the news that the market is dropping. Bank stocks and other large cap stocks were falling rapidly last week. And for a moment, it looked like the strong rally we have been enjoying for months was finally running out of steam. But here's the interesting part. Do you know that even after all that selling of last week, the market refused to break down? So the big question now is this. Was last week drop the beginning of a bigger market correction, or was it simply a healthy pause before the next move higher? Let's break it down because what happened last week may tell us a lot about where the market is heading next. Now, if you remember, the Nigerian stock market has been on an incredible run. For months, investors watched stocks prices climb higher and higher. Many stocks delivered gains that many people only dream about. Naturally, after such strong rally, something usually happens. People begin to take profit. Think about it this way. Imagine you bought a stock at 10 naira. A few months later, that same stock is trading at 18 or 20 naira. At some point, you may decide to sell and lock in gains. Not because you think the company is bad, not because you think the company will crash, but because you want to secure some of the profit you have already made. Now imagine thousands of investors doing the exact same thing at the same time. That is what we call profit taking. And that was one of the biggest stories behind last week's market movement. Last week actually started on a very positive note. On Monday of last week, investors came into the new month with confidence. The market jumped, more than 2% in a single day. That pushed the all-share index above 247,000 points. At that point, it looked like the rally would simply continue. But then things changed. Selling pressure started showing up, and the first major warning sign came from the banking sector. Some of the biggest banking stocks suddenly came under pressure. Investors started taking profit. Some stocks recorded sharp declines. And when large banking stocks begin to weaken, the rest of the market usually pay attention. Why? Because banks are some of the most important stocks on the exchange. They carry significant weight. When money starts leaving them, it often affects overall market sentiment. Well, then came another shock. Within just two trading sessions, the market lost more than 2 trillion naira in value. That number sounds scary. And honestly, if you only look at that figure, you might think investors were running for the exit. But the reality may not be that dramatic. This is where many investors make mistakes. They see market decline and immediately assume a crash is coming. But experienced investors know that not every drop is a disaster. Sometimes a market needs to cool down. Sometimes a rally needs a break. And sometimes a pullback is actually a sign of a healthy market. The important thing is to look at what happens after the selling. And that's where things get interesting. Now, despite the pressure, the market refused to collapse. The all-share index stayed above the important 240,000 level. That may sound like just another number, but in the stock market, certain levels become psychological battlegrounds because buyers defend them, sellers try to break them. Last week, buyers showed up, right? And they defended that area. Then came Friday. After 4 straight days of weakness, the market finally bounced. The index closed higher. The bearish run stopped. And suddenly, investors began asking another question. What if this decline was only temporary? Now, here is another detail many people missed. While investors were busy watching, bank stocks, something else was happening quietly in another corner of the market. It was in the insurance sector. Insurance stocks started attracting attention. Some insurance companies recorded strong gains. This tells us something very important. Money was not, necessarily leaving the market completely. Instead, some investors were simply moving their money from one sector to another. This is something professionals usually call sector rotation. But don't let the name sound too complicated. It simply means investors are changing where they put their money. Today, they may prefer banks. Tomorrow, they may prefer insurance. Next week, they may move into the industrial stocks. The money stays in the market. However, it just changes location. And that's often healthier than investors abandoning the market entirely. Now let's talk about what could happen next because this is the part every investor wants to know. The first thing to understand is that June may not behave like May. May was extremely bullish strong. The market moved with a lot of momentum, but June is often different. After strong gains, investor becomes more cautious. Fund managers review their portfolios. Large investors lock in profit, and many traders become more selective. This means we could continue to see periods of volatility. Prices may move up one day and down the next. This does not necessarily mean the bigger trend has changed. So, what should investors be watching right now? The answer is surprisingly simple. Watch the 240,000 level. As long as the market remains above that area, buyers will have an argument. It tells us demand is still present. It tells us investors are still willing to step in when prices fall. If that support continues to hold, the market could, eventually regain momentum and make another attempt towards higher levels. But if that support breaks decisively, then the probability of a deeper correction increases. This is why the next few weeks may be very, very important. Another thing investors should watch closely is trading volume. Volume tells us how much conviction is behind a move. If the market starts rising again, but volume remains weak, investors should be cautious. But if prices rise while volume increases, that usually suggests stronger confidence from buyers. Volume often tell the real story before the headlines do. And then there is the banking sector. The banking sector remains one of the biggest pieces of the puzzle. If buyers return to banking stocks and selling pressure starts easing, that could provide support for the broader market. Many investors will be watching closely to see whether banks stabilize or continue to struggle. So, where does all of this leave us? Based on everything we saw last week, the evidence still points, more towards profit taking than panic. The market had enjoyed a powerful rally. Many investors decided to lock in gains. Selling pressure increased. The market pulled back, right? But buyers still showed enough strength to defend important support levels. That does not guarantee higher prices from here. However, nothing in the market is guaranteed. But it does suggest that the bigger story may not be over yet. In fact, the market may simply be taking a breather after running too fast for long, especially last month. The next few weeks will tell us whether this is just the calm before another rally or the beginning of something bigger. Either way, smart investors will be, paying very, very close attention because sometimes the most important market signal do not happen when prices are rising. They happen when the market gets tested. And last week, the Nigeria stock market was definitely tested. The question now is simple. Did buyers pass the test? We may be about to find out this new week. Now, lastly, I won't be recommending stocks to buy this week due to the fact that, the market is, volatile. So let's see what this new week holds for us. If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.